May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to London Open at QuantBox. Today is Friday, the 21st of October. All right, so it's very important that you guys pay attention to technicals at the moment, like we've been speaking about this entire week, okay? Your fundamentals, you're still sticking to your fundamental bias, but your technicals are giving you an indication of what market conditions are like right now. Like I said on Monday, and I've said every single day this entire week, you need to make sure that if you are trading lower highs or you're selling at the top of a range. I don't trade ranges. So therefore, I'm only looking for roll reversals, okay? And this is going to help you stay out of trouble and stay out of low volatility markets, okay? So you can see our bias on euro dollar is still a strong sell. On pound dollar, we're still bearish. On USD CAD, we're still bullish. On Aussie USD, we're still bearish. Kiwi dollar is still neutral. And our yen pairs remain neutral. Let's have a look and see if they're still neutral. Okay, so Kiwi yen still a buy. Now, in terms of news coming up today, you can see we got some low, medium tier news coming out of Europe. More low news out of Europe. We've got some Fed speeches later on. Some medium tier Euro news. Some medium tier USD news. We've got a speech coming up later out of Europe. We continue with more medium and low news from Europe and USD. Low tier news from Europe. So there's definitely news coming out today. We've got some speeches and stuff. You're paying attention to the speeches. You're seeing what the Fed members are saying. Low and medium news. Ultimately, you've got a spread of news today, but I think what's important today is looking at the technicals, okay? Like the theme has been this entire week. You take a look at euro dollar, right? If we look at the daily time frame, like I've said before, if you're trading on any currency pair, you're looking either selling lower highs or you're buying higher lows. You look at this chart over here, you can see there is absolutely nothing going on, okay? You got price consolidating over here. In my opinion, stay out of that. Leave that alone, okay? If you get a lower low, you sell a lower high, easy. If you get a higher high, you buy a higher low. If you're a bull, easy, right? If you're in a range, and it's a beautiful, well-structured range, you can buy at the bottom or sell at the top. But if you got consolidation like this, then you got to be careful, okay? You can see here, very, very choppy, okay? And how would you avoid this? Well, just make sure that whenever you take a trade, price is at resistance, and that resistance is either roll reversal or top of the range. And as you can see here, we haven't had that. Very, very bouncy, right? Very, very choppy. So while you are a bear, technicals telling you stay out, okay? Don't be brave. Don't try and figure this out. You can see here, I don't see any bearish roll reversals. I don't see price being at the top of the range. The range is very badly constructed. You see that, you know, not my cup of tea, okay? Low volatility, stay away, wait for a trend. That's what keeps me alive. You can see pound dollar as well. Look at the daily time frame. Do you see any opportunities there? I see opportunities to try and be a hero, but I mean, look at that volatility there. Why are you so desperate to make money that you've got to trade that? Why not wait for better opportunities, right? Kiwi dollar neutral, so we leave that alone. USD CAD, look at that. What exactly are we trading here, right? Sideways. You could just be patient, keep your powder dry, wait for that higher high, wait for that higher low, then you can be, you know, sorted. Or alternatively, you know, maybe we're too high to be buying and we're waiting for fundamentals to change, right? That could also be the situation as well. So all our yen pairs are basically, you're sitting here with euro dollar, Aus dollar, and USD CAD. Everything else is neutral. So USD CAD, where's the trade? Do you see price closing at a bullish roll reversal? I don't. On euro dollar, do you see price closing at a bullish roll reversal? I don't. Sorry, bearish roll reversal? I don't. And then Aussie USD, do you see price closing at a bearish roll reversal? I don't. So be patient, wait. Today's a much shorter session than normal because I'm telling you guys, like, keep your powder dry, wait for opportunities, be serious about what you're doing out there, right? Don't give in to these low liquid markets. I mean, you could be jumping in anyway. Oh, look, it's over here. It's the profit taking zone. So easy. Okay, really? How would you trade that consistently? Okay. Where's your indication this is what you want to do? How you're going to trade? Consistency is the most important thing, friends. Money comes if you are consistent. And you can only be consistent if you have controls. And that'll lead to confidence, right? Control, consistency, confidence, capital. Let's see how, now these ranges could last for a very long time. One might think, okay, it'll only be a couple of days. Last year, we thought that and last for 6 months. I'm not saying that that's the case now. I'm not saying that we're going to continue ranging for the rest of the next 6 months. But I'm saying as long as we are ranging, be aware of what's going on in the market, be smart about how you're going to trade, and realize that if the market is trading like this, then how sure is it about the current bias? And if the market is telling you that there's equal bulls or bears, or there's low volatility and no one's trading, then what business have you got of trying to be smarter than the market, right? Read the charts, pay attention to price action, and be smart. This weekend, go through your trades, look at your losses, look at how many losses you made because you didn't follow that control. Go and look and see how often you could have just avoided those losses by simply either selling at a roll reversal, buying at a roll reversal, or trading top or bottom of the range. And then look and see how often you would have lost the trade if you had just traded roll reversals. And that doesn't mean you get a roll reversal of H4 or the daily. It means if price at resistance on one of those time frames, you're looking at your 15-minute chart and saying, do I have a bearish roll reversal? You can see there's nothing here, right? And then compare your notes and say, well, could I have done better? Could my trading have gone better? Could I have avoided losing that money? And then next week, apply that control, make a change to your trading, and start respecting what you're doing, right? Treating it like a business as opposed to a roulette wheel. Give it some thought. Be careful out there. You have the choice to be disciplined. Those who are disciplined and those who are patient will make money in this game. Have a good day.